There, I'm Roger Herring. I am the Investors Accountant, founder and CEO of Investors Accounting, LLC. This is an edition of Ask Roger. What is the question of the day? I'm getting bombarded with this. How much can I write off if I buy a vehicle? Great question, and my typical accountant answer is, it depends. So there are some rules that we got to follow. I put together a short little presentation so we can take a look at it. And it's only going to take a few minutes, so let's just jump right in, all right? Let's say we want to buy a vehicle. So here's what we're going to do. We're going to buy this sucker. We're going to take 100% bonus depreciation. 100% bonus depreciation is back in perpetuity thanks to the One Big Beautiful Bill Act. Now, that's an interesting word, perpetuity. For you and me, that means forever. But up in DC, that means until we change it the next time. So for right now, until they change the law, bonus depreciation is 100%. So, vehicle requirements. The vehicle has to be over 6,000 pounds. Now, can you get one that's lighter? Yes, but depreciation limits will apply. You got to put it in service this year. That means you have to buy it and take delivery and use it in 2026 to be able to write it off in 2026. It can be new or used. And you have to have a business purpose. That means you just can't drive around looking at things. You have to use this in your business. So, there's a requirement. The percentage of business use equals the percentage of your deduction. So if you buy a sport utility for $80,000, you can write off $80,000 if you use it 100% of the time in business. Now, the least amount you can use in your business is 50%, and that would give you a $40,000 deduction. You can see here what counts: client meetings and job site travel, travel between locations, business errands. And guess what? Things that don't count, there are ways to make them count if you use the proper strategy, but we're not talking about that today. Look here at the bottom, log every mile. Just because you take the big write-off in the bonus depreciation doesn't mean you get out of keeping a mileage log. Because if you're audited, you got to have that, because there's this nasty little thing called recapture. If you drop below 50% of business use, that's going to cause a major tax consequence, and you've got to be able to prove that you're over 50% year after year. So, depreciation recapture also occurs when you sell the vehicle, and that's whether you sell it outright or trade it in. Because you're getting this great big deduction up front, on the back end, you know what they're going to do? They're going to hit you with ordinary income tax on the amount that you sell it for or the amount of the trade-in. Okay, so that's something to be cautious in, because, hey, we get it great up on the front side, that's the molasses. On the back side, that's the sulfur. Now, here's a strategy for you. Can you be patient? Can you wait till the last day of the year? Buy the vehicle and take delivery on December 31st. Your business trip, that's driving it home. You drive that sucker home and you park it. All right? We're going to take 100% business use and 100% bonus depreciation. And remember, every future year, you must maintain a minimum of 50% business use. Guys, everybody wants to know about it. This is a very simple strategy, very effective strategy, especially if you need a new vehicle. A couple years ago, I had to buy one. I took a great big piece of bonus depreciation, and it really helped me out. It'll really help you out. Check out our entire library for free tax advice. And until the next time, I'm Roger Herring. Roger out.